Welcome to the Sound of Economics. My name is Guntram Wolff. I'm the director of Bruegel, and in today's discussion I talk with Paul Tucker. Paul Tucker used to be the deputy governor of the Bank of England and is now a fellow at Harvard Kennedy School, and he has just published a book at Princeton University Press, Unelected Power: The Quest for Legitimacy in Central Banking and the Regulatory State. He presented today the book, and I'm delighted to discuss with Paul first about the book, and then we want to discuss what the book implies for the European Central Bank, but also discuss the situation, current situation in Italy. Paul, perhaps let's start with the book, and you call your book Unelected Power, and you call for more democracy, more representativeness in these independent agencies. You have a feeling that independent agencies have too much independence from the political system, not too little. So what's the main reason why you push in that direction? What's the main thesis of your book?
Well, first of all, thank you, Guntram, for inviting me to be here and for the event at lunchtime. So the main thesis of my book is that the big advanced economy, healthy democracies have become slightly casual about relying on technocratic policymakers, by which I mean activist judges, independent central banks, independent regulators. And I certainly believe that those institutions should exist, but I think that they need to be designed very carefully, where the objectives are set by our elected representatives, rather than left for technocrats to decide for themselves. And the reason I think this matters is that the most wonderful thing about our system of government, representative democracy, is that it separates how we as citizens feel about the government of the day from how we feel about the system of government. Because eventually all parts of government, whether in unelected or elected hands, go wrong. And we, the citizens, vote out the government and we vote in another lot, hoping that they will do better. But that doesn't damage our allegiance to the system of government. But we can't vote out the unelected people. So we need to be really sure about the powers that we give them, and we need to be able to monitor whether they are delivering the objectives that we've set them.
But can I ask you on this point a bit further? I mean, we can't vote out the unelected, of course, because they are unelected. Nevertheless, the unelected get appointed, and usually there's strong constitutional limits that limit, for example, the term that unelected officials hold. In the case of the European Central Bank, it would be 8 years, which is quite a long period. I think many other central banks would have a shorter period. Now, isn't that the period that is needed to give these unelected officials the ability to govern with very limited, of course, objectives and very clearly defined objectives, independently without political influence? Don't you need the sort of that independence for such a short period? While in the appointment process itself, usually the politics plays a role.
Yes, I agree with all of that, Guntram. So I think the ECB system, in this respect, is rather good. 8-year terms for 6 people, staggered, so that no particular generation of politicians in the Council of Ministers can determine the policy of the ECB by stacking the board with their allies. But the second part of what you say is also incredibly important, that the objective be clear and be capable of being monitored. And my target isn't especially central banks. It is in some countries, not in not in others. There are plenty of regulators on this side of the Atlantic and on the other side of the Atlantic, which are insulated from politics but have vague objectives or multiple objectives. And those are circumstances where our elected representatives, or the American Congress, has essentially delegated high policy to the unelected power holders. And I think that's a mistake. It's not just that I think it's kind of wrong according to our values. It's that I think it takes risks with the allegiance to our system of government. So this is about my concern. I don't want to do away with independent agencies. I want to be careful about the fields that they exist in and design them very, very carefully.
Well, I think a call for carefulness in the way we design independent agencies is, of course, a very important point. Now, if you think of the European Union a bit more closely and the European Central Bank in particular, do you think that the design has been done carefully enough, both on the monetary side as well as more recently now on banking supervision, where the ECB has been granted the power to supervise banks in the euro area and has been given a fair degree of independence in that supervision?
Well, let me say something first of all about monetary policy and secondly about supervision. On monetary policy, this would be a refinement, but I think it would be better if the inflation objective was set by the Council of Ministers rather than by the ECB itself. And the reason I say that, this isn't a massive point, but the reason I say that is there's a debate amongst central bankers at the moment about whether the inflation target should be raised to, say, 4% in order to overcome the problem of the zero lower bound. This is more of a debate in the United States so far than on our side of the Atlantic. But this would be an extraordinary decision for unelected people to make, even if it were a good idea, because essentially it changes the inflation tax from 2% on interest-free assets to 4%. And if it were credible overnight, it would distribute resources from one group of people to another group of people. That's a quibble. More important, I think, for monetary policy isn't actually the design of the ECB itself. It's how the Econ Committee of the European Parliament is organized. The Econ Committee is very large, and therefore the hearings that now Mario Draghi, in the future someone else, has with the Parliament, they're not quite as challenging and testing as they could be. And I think that people all across the European continent, in fact across the world, lose an opportunity to see the central bank chair challenged and explaining in the most important forum, the Assembly. The supervision is much harder. I mean, in one sense, and this argument has some appeal in Germany, in one sense, a good way to, an obvious way, I should say, to restrict the ECB's power would be not to have it involved in supervision, just be a monetary policy maker. But actually, I don't think that's feasible. We not only need good design, we need feasible design as well, whereas any central bank is the lender of last resort to banks and others in facing liquidity problems. Well, that gives the ECB an intimate interest in the quality of banks, the soundness of banks, the supervision of banks, the regulation of banks. And in my strong view, it's much better to formalize that than to leave it as an informal arrangement. My own country suffered enormously, inflicting damage on other countries because the Bank of England had lost responsibility for banking supervision in 1997, and the costs of that became painfully apparent in the course of 2007 when Northern Rock failed. But if that's right, if the ECB should be a supervisor, I think its objective could be more precisely specified to ensuring the resilience of the system, not managing the credit cycle or pricking asset price bubbles or ensuring that every bank will never fail, but just ensuring that the monetary system is resilient, is stable. And that may not sound very much, but actually it would make quite a lot of difference. I think also, by the way, that there is a problem in the fact that the representatives of national supervisors have a majority of the votes in the ECB supervisory body, which risks undermining the very purpose of giving this function to the ECB, which is to overcome the capture of national officials by their local industries and local politicians.
Well, I think the latter point, the fact that we have 19 national central bank governors and only 6 from the center at the ECB itself, is, of course, also a reflection of the fact that the Eurozone is not a fully fledged and integrated state with a parliament that would be comparable to a parliament of a single state. Therefore, the national governors, in a sense, do represent the views, the national views, which are there because basically national democracy is still the predominant form of interest representation in the Eurozone, certainly. While the Econ Committee that you reflected quite a bit on is, and I agree on the organizational setup, but still I think the key issue of the Econ Committee is that it has very little actual powers over Mario Draghi and the ECB. I mean, quite to the contrary to, let's say, a Senate committee in the US, which, when it quizzes the Fed chairman, in the end can always go to the nuclear option, changing even the laws that are the basis of the Federal Reserve System with a simple majority. I mean, the Senate and the House of Representatives can do that, while the European Parliament can do nothing of that sort. So isn't the issue here less an issue of organization of the Econ Committee and more an issue of an incomplete monetary union, which basically combines states, national democracies, and has a parliament with probably a European Parliament with probably too little powers?
Yes, I think, in a word, is my answer. It's something similar could be said about the United States, in fact, as well. But if we see the 19 national central bank governor members of the governing council as kind of a political check and balance on an executive board of 6, with the executive board initiating policy and needing to carry this group of 19. Suddenly the whole thing starts to make sense, but is in somewhat tension with the law, because as a matter of law, the 19 men and women representing central banks have a duty to cast their vote in the interests of the euro area as a whole. Whereas, of course, actually what we've seen is that they vote according to national and regional interest. I'm not saying that they're conscious of doing so, but the pattern of voting southern governors for a softer policy, northern governors for a harder policy, is pretty conclusive evidence of that. So there is a tension between their legal obligations, if one thinks about it in terms of legal constitutionalism, and actually if one, and what one might call the political constitutionalism of the ECB, where they are some kind of federal check or confederal check on the executive, the central executive. But if that's the case, and I think it is, then there should be much more transparency around the exchanges that go on in the governing council, because it means it's not a purely technocratic debate. Years ago, when the ECB was created, there was a great debate about whether the votes should be published. And the then governor of the Bank of England, Eddie George, who was a very great central banker, came to the defense of the ECB, saying, oh, no, they shouldn't. It's good, all right, for us in the UK to publish the votes in the Bank of England, but it'd be a mistake for the ECB to do so, because if they were to do so, national central bank governors would end up facing domestic pressure. But that's where we've ended up. And the votes are leaked sufficiently that we all know, without the transparency that could help broader public debate and how the system works. In other words, the system, you and I are sitting here to some extent improvising and describing how the ECB really works in a way that actually is defensible in principle, given the incomplete constitutional project in Europe as a whole. And yet it's hard for the people to see that. And that would worry me. I think the way something really works should be obvious or should be transparent to the people.
Right. Perhaps let's move to the last topic I want to quiz you on, which is Italy, and perhaps the way to start that conversation is by picking up on your previous point, which is the voting pattern of soft currency governors and hard currency governors, if I may call them like that. The clear differences in the voting behavior that we have seen and that has been documented or leaked and documented in the anonymized minutes that are now being published, but you know that where you basically don't see the name, but everybody knows who's speaking, right? So we do see this tension in the Eurozone between basically very different monetary policy cultures, very different cultures in terms of wage setting behavior and so on and so forth. And you know, this comes now, I think, very strongly to the fore in the case of Italy, which, you know, of course, has a lot of domestic problems that I think are the main reason for the economic malaise, but that does feel the political tension of being in a hard currency area and not having the instrument of loose monetary policy and a high inflation tax to solve some of its distributional issues. So where do we go from here? I mean, nobody can predict the politics in Italy, but what does all of this imply for the future of the Eurozone in your view?
I think it's immensely difficult, and that thought isn't prompted by events in Italy over the past few weeks. The Italian people have voted for something that they want. They want a particular government, and to give it a chance. The underlying problem is that the currency union, the euro area, is only half built. For any monetary union, you need some elements of a fiscal union, not in the way that a nation state has it, but you need some system of transfers. Now, there are people in Europe that say we can't have transfers, but there are inevitably what I'm going to call contingent transfers, because each one of us as an individual effectively has a current account deficit or surplus with every other individual. Every village does, every town does, every region, every member state. If a member state is running an external deficit and can't finance it in the markets, it inevitably builds up a loan obligation via the payment system. And people have made this sound terribly mysterious, Target 2 and acronyms and things, but it's just actually like having an overdraft at the bank. And Italy's got a vast overdraft. And if ever they were to leave the euro area, and if they did so and defaulted, well, then Germany and others would discover that there had been a transfer union all the time. And I wish this was clearer to the German people, because it makes clear, so what's the best kind of transfer union to have? And the euro area may at the moment have a pretty faulty, flawed transfer union. But that isn't to deny that Italy needs structural reform of various kinds. So the South is right about some things, and the North is right about some things. What a surprise! And it's a terrible thing that each side insists that what they say is right and what the other side says is wrong. Actually, we're in a situation where virtually everything that's said may be right, but doesn't yet command sufficient support. So that aside, the big issue is it is very hard for countries to stay together in a currency union if they have very different rates of growth, underlying growth. Because when that happens, the rich area needs to help out the struggling area. Now, in a nation state, nation states have their own problems, but in a nation state, this happens more or less automatically, and the people accept it, even sometimes embrace it, because of the cohesiveness of the nation as a political community. And the euro area's greatest challenge is that it needs some system of fiscal transfers to make it function as an economic union, but perhaps doesn't have the political cohesiveness for that to be politically feasible. And yet, it would be mightily difficult to extract any of the current 19 members of the monetary union from the monetary union. And there are people, I don't know whether it would be a good idea or not, but there are people that think that Italy or other countries should leave the euro area. But no one knows how to do it, by which I mean knows how to do it in a way that wouldn't bring about a calamity. And it would certainly need immensely careful planning, and I suspect something like a modern Marshall Plan of aid from the surviving members to the departing members to maintain political stability in the face of what could easily be an economic crisis in the short run for the departing members. The great problem with economics is even when decisions make sense in the long run, you have to survive through the short run to enjoy the benefits. And so this is a challenge, and the only people, we talked about the ECB. The ECB cannot solve this. The ECB cannot heal the monetary union. It cannot generate prosperity across the currency union. Only the political leaders of Europe can do that.
Well, I certainly agree with the last point that the ECB cannot heal the things that don't function well in the monetary union. And I think I also agree with your statement that both sides are right on many points they're making and have a point in pointing to the things that don't work well. Now, the hope, I think, is that we will reach compromise, but of course there's the risk that we won't, and then we are left in a very, very complicated place. Now, we could discuss this forever, but I think our time is up. Thank you so much, Paul, for your time today and for that discussion. It's been a real pleasure, and until next time, bye-bye.
Thank you, Guntram.